right. Good evening, everybody. Let's go ahead and get started. I want to welcome you guys here. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it is indeed working. Hope everybody's having a fantastic evening so far. Hopefully, your Thursday's been good. It's been a fun week with those weekly trades. Obviously, doing great things. I'm excited to close those out tomorrow. I think it'll be awesome. And then we've got this overnight trading strategy. Looking forward to starting day 4 of the sequence multiplier tonight. Hopefully, we can get a win. We'll see what happens. But yeah, that's what we'll be talking about tonight in this webinar. We'll go over the overnight trading strategy, the rules, making sure everybody knows how to trade it. I also want to make sure that you guys know how to enter trades into a journal so that you guys can keep track of how you're doing with the strategy. So I'll walk you guys through that tonight. I think that'll be awesome. But yeah, looks like we're up and running and good to go. Okay, perfect. Thank you, Robert. Looks like you guys can hear me. That's awesome. I want to give a shout out to those of you live and also those watching this in the recording through the website. Want to say hello to you guys. Also want to give a shout out to those of you who are watching this on YouTube and want to say hello to you guys. If you guys have questions throughout the webinar live, feel free to ask those questions in the comment in the chat box there. If you're here watching this on YouTube, feel free to ask those questions in the comment section down below. I will get to everybody's questions and comments later. I just want to preface this. So if for those of you that are new to the overnight trading strategy, this is an amazing system. We've been trading this strategy probably for, I think 16 or 17 months now, and it's incredible. We have had, I don't know how many, but I know it's in the dozens of traders who have gotten funded with the overnight trading strategy. And most traders who have attempted a prop firm challenge with the overnight strategy have either gotten funded or they're in the process of getting funded. All right. So it's an incredible system, and I think one of the reasons why people love it so much is because it only takes a few minutes a day. Like you just come in at night and take the trades. It doesn't take too much of your time. And I think I mean, obviously there's other reasons behind why the overnight trading strategy is so awesome, but I think those are some of the big ones, like I said. Um, let's see, and then obviously because it makes money. I mean, in a trading world where so much doesn't work, the overnight trading strategy comes ahead. And we've had a lot of ups and downs with it, and that's something we want to talk about tonight. Is I want to show you what it looks like to win, how to expect to win with the overnight strategy, and also how to expect and handle losses, because losses are a part of trading. And no matter how good your system is, if a strategy actually does not lose, its time is limited. That's something that I've studied over my period of trading, my 13 years of trading. I've come across systems that look amazing. They never lose, and then when they finally blow up, the blow up is really bad. So what I've learned over time is that the best systems are those that allow for losses along the way appropriately. And if you're taking those losses appropriately, then that's a system that I think I could get behind. So that's what we're going to show you tonight. I'm going to show you how everything works with this. I think it'll be awesome. Before we get started, as always, I need to remind everybody about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your contract size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, well, let's jump right into this. So I'm going to show you guys how the strategy works and why we trade it and all the good things that you would need to know. Let me pull up the euro dollar here so that we can have a discussion on this strategy. So first of all, let's talk real quickly. What does it take to be a profitable trader? Like if there were like let's just answer the question. There's a lot of different ways to answer this, but from a statistical standpoint, what's required? You guys probably saw my video recently. Maybe you did, maybe you didn't, where I go over the like the top 3 metrics that a successful trader subscribes to. Number one, the number one thing that actually distinguishes a winning trader from a losing trader is if a winning trader adds to their winning position. Like, does their winning position, are you using a bigger contract size on your winner? And are your winning trades making more money than your losing trades? That's really the essence of what separates a winner from a loser. If you were to look at the trading statistics of a losing trader's account, the most obvious thing that you would find inside of their transaction history would be that their losing trades are bigger than their winning trades. And I know that sounds super obvious, and it's like, well, duh, Steve, of course. But it's like, but hang on, like, realize what's going on here. Okay, if that's the truth, then how do you do the opposite of that? And guess what? You have control over that because there's a thing called a stop loss that a lot of people don't use, right? A lot of people don't use a stop loss very well, right? And so when we think about like, okay, the the number one thing that separates a winning trader from a losing trader is how big their profits are versus how big their losses are. Turns out that is a variable that we have control over. We can't control which trades win and we can't control which trades lose, but we can control how big those losses will be. And we even have control on how big the profits will be, which people don't know this. Like they choose not to control those variables, right? So like if you were to go into a profitable trader's transaction history, what you would probably find, obviously, is that their winning trades are bigger than their losing trades. Now, what you may or may not find is a win rate that's positive. That's not a correlated thing, by the way. Win rate does not necessarily, in fact, that's like when we talk about, this is really eye opening actually. When we talk about like what makes somebody profitable versus makes what makes somebody a profitable trader versus what makes them an unprofitable trader, the win rate like has the least amount to do with you being profitable. And it's funny because when I talk to people on the phone and that people ask me all the time, they're like, "Hey Steve, what's your win rate? You know, what's your win rate with the overnight strategy? What's your win rate with the weekly trades?" They're like, you know, what what's your win rate? That's the number one thing I get asked. And it's a good thing to ask. I'm not saying it's a bad thing, but the win rate has the least to do with your ability to be a profitable trader. It really does come down to how big your wins are when you win versus how small your losses are when you lose. Because when I first started trading, I got into this mode of like not even using a stop loss. Like I went and found strategies that didn't even use it. In fact, I used to be a scalper where I would have these like little 2 or 3 pip take profits, and I thought I was being really smart because I'd hit that take profit all the time, and it felt like money was just hitting the bank account like every few minutes because I had that little 2 or 3 pip take profit. And then I'd have these like 100 pip stop losses, which when you think about it, it's like an irrelevant stop loss. Like the stop loss is not even in existence at that point if you're having a 100 pip stop loss. And so that's what I used to do. And guess what? My win rate was really high, right? I was winning like every single trade. 90% of the time I'd win. But what happens is the 10% of the time that I would lose, the loss would be so devastating on that 10% of the time that you would lose money. And so that's how I want to introduce the overnight trading strategy because when people ask me specifically with this strategy, because the win rate with the weekly trades is actually a lot higher, but the win rate with the overnight strategy, depending on which version of it you trade, is either 41% or 29% or 29 to 30. So that means you're losing 59 to 69 or 70% of the trades that you take, which most people would hear that and they'd be like, okay, Steve, I'm done. I'm not going to listen to you anymore. But because that's what people care about is win rate. And why, and by the way, just real quick and we'll move on because I just really want to slam this home. Why do people care about win rate so much? Because people care about me being right more than profitable. And I know that sounds crazy, but like it's a truth. You'll learn about this in the Best Loser Wins book. Most people can't get over their pride. They're just like, I just want to be right. And more people want to be like, yeah, see, I called that trade over there. I called that trade over there. And they're less concerned with actually being profitable and they don't even realize it. I think deep in our hearts, we're like, yes, I'd like to be profitable. Deep in my heart, yes, I want to be a trader that makes money consistently. But at the end of the day, it feels better to me to be correct about what's happening in the markets and about this particular trade. And if I lose on a trade, that's admission that I was wrong. And so that's a very hard thing to do in this, especially in today's society. Who wants to admit that they're wrong? Nobody does that. Like it's very rare to find people that are like, "Yep, I was wrong. Yep, I was wrong. Yep, I was wrong." Like who has like this huge ownership? Very few people have that. And so that filters into trading. And unfortunately, it's the exact thing that breeds unsuccess, like lack of success in trading. So the sooner we're like, I was wrong on that trade and I cut that thing off fast, that's the area that you have to be in to become profitable. Is how fast can I cut this loser, right? And then how long can I hold my winners? Which is a whole nother thing. That is a whole nother thing. It's really tough to do because it's one thing to cut your losers. It's another thing to hang on to a winner. Especially this week. We've had a really good week with those weekly trades. Awesome week, right? It's been profitable. We've been in the money pretty much all week long, except maybe Monday. I think there was a point on Monday where I was down a little bit, or Tuesday, maybe even up to Tuesday, I was down a little bit. And then boom, we just had over Tuesday night just massive profits that just came all at once, and everything's profitable, which is awesome. And we've had to hold on to those trades all week long, and that's a tough thing to do because again, when a lot of the retail traders see profits in their account, they're like, "Oh, perfect! I'm going to take that profit. I need that profit." But in reality, we have to hold on to those profits because that's exactly what leads us to success is holding on to winning trades longer than losing trades. Okay, so with that in mind, let's jump into the overnight strategy and how it works. All right. So again, this strategy out of all the systems we trade has the lowest win rate. But what does it have that's so successful? Really big, massive winners. Okay. Massive winners, more frequent losers. And so let's go into how we do that. Okay. So this strategy is meant to be traded 5 nights a week, Sunday night through Thursday night. And it does have to be traded every single day because we follow what's called a sequence multiplier, which we're going to introduce in a further segment in the webinar. And it's very important that we trade each day because each trade builds on each other. And if we have a losing day, we have to get our money back. And so we have a method on how we get our money back from the market. And it's based off of the previous day's results. And if we don't trade each day, then we won't have results to go off of. So there is a commitment here. It is 5 nights a week. It does start on Sunday and it does go till Thursday night. And you will have to close your profitable trades manually if they don't close out on their own, which often they don't. Often you'll have to close out your profitable trades, and you have to hold them until the afternoon. So there are some commitments that way. This is not a system that you can just walk into and just be like, "Oh, I'm feeling like trading right now, so I'll just go put in a trade." No, it has to be put in before the London market opens. So that's what I'm going to show you next. So this trade strategy, we use an indicator called sessions. All right. So you can get this indicator for free on TradingView. You just go to TradingView, you pull up a chart on the euro dollar. That's the currency pair we typically use. And then you're going to type in sessions in indicators up here. Okay. And there's a lot of different sessions indicators. You can use the one by Lux Algo, which a lot of people use. I use this one called Sessions on Chart by Aurochs. And if you just click on it right here, it'll pull up. And then in the settings over here of the indicators, you can click on the settings, and we just want to show the Sydney market. You can show the London, New York, or Tokyo. And if you turn them on, it'll highlight, but we just want the Sydney to show up. Why do we want Sydney? So just to kind of go through this quickly and just get to the point, the reason why we want Sydney to pull up is because this is the trading session in the evening here in the United States. This is the trading session that is least volatile. And it's also the trading session that is open right before the London market opens.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve's Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
In fact, when Sydney closes, Frankfurt and Brussels and Amsterdam, those open up at 2 a.m. Eastern, and then at 3 a.m. Eastern, an hour later, the big London market opens up. And by the way, for those that don't know this, the London market is the number one uh, trading session as far as a volume goes in the entire Forex world. I know Forex is open 24 hours a day. Some people think it's New York, but actually, London is the number one trading session out there. So, when we talk about big moves that can happen in the market, most of those big moves will indeed happen during the London session, and probably during the crossover period where London and New York are open simultaneously. So, so we want to have sessions pulled up and we want it to show Sydney because usually during this period of time, and you can actually see it, like if I point to this, you can see this is Sydney from yesterday. Very quiet session, not a lot going on. Then London opens, Frankfurt opens, Amsterdam opens, and then all of a sudden you get all this movement that happens right here. Okay. Over here, this is 2 days ago. You have kind of a quiet Sydney session, and then boom, we get all this movement over here during London and New York. This one was kind of a little bit more active right here. Then you got some pretty good movement right here during London, New York. Again, if we continue right here, this is the 18th, Monday the 18th. You had a pretty quiet session of Sydney during the evening here in the United States, and then London opens up while we're asleep and lots more movement. Okay. So this is the edge of the strategy. We're trying to take advantage of this move during London while we're sleeping. And we're positioning ourselves to take advantage of it the night before. Okay. So that is the important preface there. Okay. So here's what we're doing each day. Let me actually find a pretty good example of this. Let me see if I can find. Yeah, this is actually pretty good right here. This is Thursday, August 14th. This will work just fine. Okay. So what we do is we come in here at night and we box up the Sydney session. So we actually come in here and we highlight the highs and the lows of Sydney. So you're typically going to be doing this at night, probably between the hours of, and it depends on the time zone you live in, right? But I usually do this around midnight. This is I do it kind of late. That's Mountain Time Zone. That would technically be 2 a.m. Eastern. You don't have to do that. Most folks, I think, do it somewhere between like their local time of like 9 and 10 o'clock. Um, I don't know if there's an optimal time to take this trade. I've just out of habit have done it at midnight, which is the London, no, excuse me, it's the Sydney close. But if you have to take the trade 4 or 5 hours earlier, that's totally fine. I would say the earliest you can take this trade would be, I would say like 9 p.m. Eastern time. That's the earliest. And then I'd say the latest you have is until the London Open. And honestly, I probably wouldn't even wait till the London Open. at 3 a.m. Eastern. I would say 2 a.m. is probably the cutoff because technically Frankfurt opens at 2 a.m. Eastern and the markets usually start moving. Or, like, for example, here, this was back on Thursday last week. You can see the markets moved pretty swiftly. That didn't take long at all for that to move pretty quick. Okay. So you do want to get this in before, I would say, 2 a.m. Eastern. So it's like a 5 hour window. Okay. So 9 Eastern to 2 a.m. Right. So just remember that, write this down. You'll come in here during that window of time and you're going to box up Sydney just like this. All right. Then what we're going to do is we're going to set up a breakout trade. Um, um, then what we want to do is, let's see, we want to set up um, short position right here on the, okay, let me rewind. So what we're trying to do is we're going to set up a breakout trade using this box. And we're going to take two trades. We're going to set up a buy stop order and we're going to set up a sell stop order. So we really don't care which way the market's going to go. We're not speculating a direction. We're not using some kind of indicator to be like, oh, yeah, I think the market's going to go up or maybe the market will go down. We literally do not know and we do not care. All right. I just care that it moves. I don't care if it's the south side or the north side. I just want it to move hard and I want it to move quick. And some days it's going to do that, and some days it won't. And I'm going to show you how we handle the days where it does, and it does great. And I'm going to show you how to handle the days where it doesn't do that very thing. Okay. So on the good days, like I said, going to be a pretty big breakout. But here's how you set up the trade. I like to use these little projection tools. You can get them on TradingView over here on the left hand side. It's under this option: projection long, projection short. And what I do is I take let's do the long position first. I go to the top right corner of the box. This is called the Sydney box right here. And I just drag and drop, just let go. And then I want to adjust the stop loss so that the stop loss goes on the other side of the box, about right there. Then what I do is I extend the take profit 5 times what we're risking. So you can see right here the stop loss says 19.9 right there. That's how much we're risking on the trade, is 19.9 pips. And so if I take this target 5 times, this is where I'm going to go with them and take this up to there. And that gives me a 1 to 5 RR ratio. So before we move on and show you the rest, basically our goal here is if this trade moves up, we want it to trigger buy and we want it to just go straight up. And we're asking the market for a lot of money. Okay. This is very, very important that we understand this part. We are asking the market every single day for explosive moves, whether those moves happen or not. We're just asking for it. And I already know that most days I'm not going to get a 1 to 5 explosive move. I'm perfectly aware of that. People remind me of that almost every day. And I'm like, yes, thank you for the reminder. I built the strategy. Like, yeah, I already know the market's not going to go that far. So I know people often tell me, Steve, if you would just move your take profit down quite a bit, you'd hit your take profit more often. And I'm like, yeah, thank you. I know we probably would. But no, the whole goal of this is to have a big old take profit. And again, I'm not trying to be offensive. I'm just trying to help you guys understand because it's very important that we get this right. Because the strategy has a very specific rhyme method and reason. We've done a lot of back testing. We've done a lot of numbers on this. You want to have a huge take profit that's around 1 to 5 or 1 to 6. All right. And the few times that you hit that in a month or in a quarter, it's going to just pay you so much. Okay. You're going to see that in action here in just a moment. Okay. So you got to set up a big take profit, and it's 5 times what you're risking. So you just move that up. You might have to adjust your chart like this over here on the right side so that you have room to bring that take profit up as far as you need to go. Basically, what we're doing right now is we're trying to build a blueprint. Like if you were to build a house, you would need blueprints, right? You couldn't build a house without blueprints. Otherwise, the city or county would get mad at you, right? So what you're doing is you're building out a blueprint. You're saying, hey, this is where my take profit's going to go, is up here. That's my entry price for my buy. That's my stop loss, and that red number for my sell. I'm building out blueprints is what I'm trying to do, right? Okay. Now we're not done yet. We got to set up a sell stop order. So let me actually let's do a rewind so that you guys can see what this looks like. So again, I'm basically just pretending that I'm trading this as you on the 14th. Okay. Then I'm going to put in a short position right here in the bottom right corner, right there, just like we did with the opposing order, the buy stop, just on the other side now. Then I'm going to bring my stop loss up here to the other side of the box, just like that. That's just the other side of the Sydney range. Okay. And then I'm going to bring this 1 to 5. So a big old take profit, huge take profit. This is basically one old, I just call this like a butterfly, just you got these big wings on the side and then the body in the middle right here. This is what you're risking on each trade. You're risking what the distance between here and here. So basically what happened in a perfect world, and sometimes we get a perfect world, okay? Not every day, we already know that. But when the perfect world scenario comes along, you're going to make a ton of money if the market goes down hard, or you're going to make a ton of money if the market goes up hard. We really do not care if it goes up or goes down. I just want to remind you guys, this is not a speculative strategy where you're speculating the price of tomorrow or the price, hey, Trump said this or Jerome said this, so we should buy. No, forget all that. Just to block out the noise completely. This is just a breakout trade every single day, Sunday night through Thursday night, right? Okay. So in a perfect world, like I said, that's what happens. Okay, let's talk about the not so perfect world. So let's talk about the couple of different scenarios where this doesn't go right. So if you set up this breakout trade and you go to bed, you close the laptop, this is the last thing you do before you go to bed, and the market goes up first. Okay, that's great. But then while you're sleeping, it pulls back. You're going to hit your stop loss right there and it's going to close on its own. And then about the same time that you hit your stop loss, you're also going to trigger into a sell while you're sleeping. And if that trade makes money, great. You can recover the loss that you incurred on that buy trade. But sometimes this can also happen. It can trigger the sell and then the market can go up again. And it stinks when this happens because this is called a double whipsaw, a double whip day, because that means the market triggered your buy and then it came down, triggered your sell, stopped you out of the buy, and then it also came up and triggered you out of the sell and you lost both directions. It's very offensive. It's not fun when it happens. It's insulting. You can wake up in a terrible mood if you let that affect your life, right? It definitely can. So I'm letting you know beforehand that this is not fun. And by the way, what you're looking at right there, that happens about 2 to 3 times a week. So yeah, it's not fun. You're gonna hit this. You're gonna get whipped out 2 to 3 times a week on average. This week wasn't so bad. We did have some losers, but last night was a double whip. But we haven't had a ton of double whips this week, so it's not been terrible. But yeah, you can go Sunday night, wake up, double whipsaw, and great way to start your Monday, right? And then Tuesday you wake up, double whip. Wednesday you wake up, double whip. It can happen quite a bit, and it does affect your psyche, and it will take money out of your bank, out of your trading account when that happens. Okay. So just letting you know beforehand that that is normal. So if you start taking this trade and you're like, Steve, I woke up and I lost on both directions. What the heck? Did I do something wrong? No, you probably did it right. It's just it's the law of averages. Sometimes the trade does really, really well. And most of the time it's either losing a little bit or breaking even. That's what it's doing most of the time. And then you'll have 4 to 6 days a month where you just kill it and absolute big wins come along. So, all right. So, okay, so this is what the trade looks like right here. So this is a good time now to introduce the sequence multiplier and how we kind of like force our hand and force our way to make money. Before I do that, there's one other thing I wanted to say on this. Okay, so this is just your blueprint. And then if you were setting up this trade, you would now need to go use a position size calculator to figure out your lot size. And then you would use the sequence multiplier, which I'm about to show you how that works. And then that's what you would use to, figure out what what, how big of a trade you're going to take and all that kind of stuff. Okay. This is what I wanted to start with. I wanted to ask you guys a question, and we got a decent group here, so this is good. For those of you that are here live, and if you're watching this on YouTube right now, feel free to chime in. Even if you're watching the recording, let us know in the comment section down below what you think. But here's what I wanted to ask you guys. And a lot of you guys are experts. We do have some newer folks, who have joined in the last couple of weeks. And so, chime in as well if you want to give your best guess. I think that would be really nice as well. But in the chat box, will everybody tell me what you think the number one variable in trading is? Like the number one thing that you can control. I'm going to give you a couple of things. Here's your options. You can choose your stop loss. You can choose, is that the number one thing that affects your profitability? Is it your take profit, like where you put your take profit? Um, is it your like schema, like your strategy, like what gets you into a trade, um, which ultimately affects your like win-loss ratio, or is it your position size? So you guys tell me, and again, it's very subjective, and I'm sure people can make arguments for all four of those things. But you guys tell me of those things, which thing affects your, and again, here's the specific question, your profitability, like the dollars that go in and out of your account. Hint, hint. Which thing affects you the most? Okay, let me look and see what we've got here. Feel free to chime in if we've got one answer right here from Lauren. If you guys have if anybody else wants to put in an answer, that'd be awesome. Here, let me go ahead and make my chat box bigger so I can see this. Okay, we got Daniel saying your stop loss. Okay, that's good. Got some different answers there. That's awesome. Robert says your stop loss. Okay, very, very good. Okay. Okay, so let's have a good, this is really good. Good. And if anybody else is typing it in, go ahead and get it in there. But let me tell you, so here's what I think. These are good. I mean, obviously all four of those things affect your profitability. All right. Definitely. So I don't want to say that one isn't valuable. They all are important and part of the recipe that make or break you as a trader. Okay. But here's where I'm going with this. Let me pose it this way. If I took a trade right now and that trade was, let's say I took a very small position, like a zero point zero 0.01 contract, and that trade was, I don't know, let's say it went up 1,000 pips in my favor. How much money can you make on 1,000 pip move with a zero point zero 0.01 contract? I think it's going to be like $100. So you'd have to make like a 1,000 pips to make $100, right? Okay. Or vice versa. Like if you lost and you didn't have a stop loss and you had a zero point zero 0.01 contract size and then the trade went against you, 1,000 pips, you'd lose $100. Okay, big deal. No one cares. That's a small amount of money, relatively speaking, especially if you're trading on a bigger size account, right? So, so we, so obviously pips don't mean a lot unless your position size is involved, which obviously it is. So that's my argument there is that your position size, and nice. It looks like Sergio and Lauren were kind of going that direction too. That's where I want to go with this. Your position size is the number one thing that affects your profitability. And it's also the number one variable that you can control in trading. I don't really, I mean, somebody could argue it against me on that. I'm actually welcome to other arguments, man. I'm welcome to see another perspective. But as of right now, my opinion is that the position size and what you do and your methodology behind position sizing is the number one thing that you can control in trading, right? Like if I took a trade, the same trade, and it made 1,000 pips, but I had, I don't know, a full contract on that trade, I mean, that's going to make like $10,000, right? That's an amazing trade. Yeah, yeah, you'd make about $1,000 with 1,000 pips on a one contract, and then you'd only make $100 if it was a micro contract, right? Daniel says, "I want to change my answer." No, and by the way, the stop loss is very important. Obviously, we don't need to go into all the details, but yeah, the stop loss is required. I've been down those rabbit holes of, people who choose not to use a stop loss. And statistically speaking, your days are limited if you don't use one. We don't need to go into all the details, but um, yeah. Here's the other problem. Let me just, I got to share this because it's on the tip of my tongue here. If you don't use a stop loss, it conditions you to not position size well, believe it or not, because you have no choice but to use a small position size if you don't use a stop loss. So you never level up as a trader. That's your destiny as a non-stop loss trader is somebody who never levels up and uses big lot sizes because you can't ever afford them. And that's the risk of not using it. That's really the true risk is the lost opportunity, not the money that you could lose. It's because it stunts your growth and your ability to expand as a trader because you just elected not to use a stop loss because you don't want to lose, basically. So you just become stunted. Yeah, that's actually the reality of not using a stop loss is it's more the missed opportunity of being able to level up as a trader versus what you're risking from a dollar standpoint. So anyway, just wanted to share that because that's really important that I share that there. Okay, so position size, number one. So that brings us to the sequence multiplier. So we very much control the position size with this strategy. So let's go show you what the sequence multiplier looks like. This is the journal, by the way. You guys all here have access to this in the class here today because you guys are here live. That means you're a member of the program. If you're not a member of the program and you're watching this on YouTube, this journal right here is a member benefit. If you would like access to this journal, you can join. You'll just have to, there's a link in the description to join the program, but down below. But this is the journal. So you guys can see all of the trades that we've taken with the strategy right here since the beginning. These are live trades in a real prop firm account where these trades have been taken. And we've updated. We've literally every single trade you see here has been updated in a webinar. So in the live trading calls in the morning, the first thing we do is what? Like once we get through the welcome and the disclaimer, the first 15 to 20 minutes we just go through the journal and talk about the strategy and how it did overnight. So that's amazing because you're getting that full transparency of the strategy and how it's performing. Is it doing well right now or is it not doing well? You can see all of that in motion, which is really, really cool. So let me show you the sequence multiplier. It's this thing down here. Okay, this is it. This is a matrix we put together with the different risk settings. Most people use what's called the 1.5 multiplier. What we do with this is we risk a certain amount of risk per trade when we take this little overnight trade that you see right here. So when we're following this correctly, we'll start off by risking 0.25%. That's a quarter of 1% of your account per trade on your first position. All right. And that means that if that trade loses, the worst thing that could happen is you lose a quarter of 1% of your account on each trade overnight. So technically, you're risking a full, like 0.5% of your account on your first night. But that's the worst thing that could happen. You won't wake up to a loss worse than that. If you did wake up to a loss worse than that, then we know we did something incorrectly and we would need to go figure out why. But yeah, that's the max risk. If you lose money on that day, we will come back and respond with a new breakout trade with a huge take profit like normal, but with a slightly bigger contract size according to the sequence multiplier. So if I took this trade, let's say yesterday, and it was my first day trading it, and I woke up to two losses this morning, I would come back and respond to the market tonight, taking the exact same breakout trade, but with a slightly bigger contract size of 0.38% risk per trade. And what this does is if tonight's the night where the markets break out pretty hard, what ends up happening is we capture all those pips, which are important as we discussed, but the most important part is that we capture that many pips with a bigger contract. Thus, we are getting a bigger win on our winning trades and our losers are smaller. That's how we accomplish that. Okay. Then, if that day loses, which can happen, you can have multiple lost days in a row. You go up to day three in the multiplier, which would be 0.57. And then if you lost again, you'd go to 0.86. And then we go all the way up to 6 days and we cap it at 6 days. So if we don't get a win by, day six at 1.94% per trade, then that's called bust. And a busted sequence is where you don't get to close out successfully by the end of 6 days, and you'd have to go back and revert back to 0.25, which has happened. This has happened a couple of times on the once or twice it's happened, and most recently it happened once in June. We did have a busted sequence in June. So it is a real risk. You can lose money with this, and it can go the wrong way for a little while. We trade another strategy called the half box version, and that one has gone bust more often, like it's broken the sequence more often. Ironically, it's actually more profitable, that strategy, that version of the overnight strategy. And it's because the stop loss is tighter, and therefore on breakout days, you end up making more money because the stop loss is tighter. And therefore, the position size is also bigger on those days. Anyway, so this is the sequence multiplier. Now, this is the risk that I've been using for most prop firm accounts. Most people, I'd say 90% of the program uses this multiplier right here. Probably the other 10% use the 1.25 multiplier, which is this one. And this is just a much more conservative, a little bit more watered down version of the sequence multiplier. It doesn't increase the risk as rapidly. In fact, it only increases at a 1.25 multiple. And so you can see it still increases the risk, but it's much slower. And you have up to 10 days to get a win instead of 6 days. Um, I don't think, from my recollection, I don't know if anybody's ever gone bust on the 1.25. I will say, though, that it's not nearly as profitable. In fact, if you trade the 1.25 multiplier, you'll probably make about 40% of the net profits of the 1.5 multiplier. So just going down in that sequence to this one does bring down your net profits by a lot. So I'm just letting you know beforehand. Practically nobody uses the 2x multiplier unless you use what's called the Reapers, which is also another version of the overnight strategy. But like this 2x multiplier, I would not recommend. It's way too risky. You're doubling your position after each loss, and that's not okay, right? We don't want you to do that. So, all right, cool. So this is the sequence multiplier, and that brings us to the position size calculator. So if I were to take this trade right now with you guys right here, um, the way I would do that is after I finished, let's say I finish doing this, um, I set up the breakout trades. I've got this little buy stop ready to go and the sell stop. Now I actually need to go execute the position. So the way I would go do that is I like to go to tradingwithsteve.com. Under free tools, we have a free lot size calculator, also known as a position size calculator. And this is totally free, whether you're a member of the program or not. Anybody can use this tool. And it will help you fine tune your lot size to whatever it needs to be according to your own calculations, like whatever stop loss you're going to use, however big your account size is. That's important, right? Somebody who's trading with $100,000 is not going to be managing risk the same way somebody with $10,000 is trading with, right? I mean, they might be taking the same trade, but your lot size can't be the same as the guy that's trading with an account 10 times bigger than yours, right? So it's important that we fine tune that. And that's what this tool is for, is to fine tune your position size. Okay, so let's go through what that looks like. So when you use this tool, you just got to put in number one, the instrument. Okay, we trade the euro dollar, that's already in there. The deposit currency is your local currency. If you live in the United States, that's just the US dollar. So you don't need to do anything with that unless you live outside the United States. All right. Then your stop loss is just whatever your stop loss is that you pre-calculated over here. So we figured about 19.6. I usually round the stop loss down just so you know. So if it says 19.6, instead of just rounding it to 20, like a lot of people might do, I prefer to round down. There's a reason for this. And basically the reason is if you're trading with like a US broker, they think you might be hedging if your stop loss is overlapping the opposing order. So if you have a stop loss on your sell trade that overlaps the buy stop order, they might think you're trying to hedge. And so I prefer to have my stop loss a pip or two below where the buy stop is actually going to be. That's why I rounded down. So I would go with 19 pips is what I'm trying to say. So round that number down, whatever you get right here. All you have to do to figure that out is once you've done your job here, you just hover over the trades. You just bring your mouse and you'll see like when you hover over these, you can see like it's got a 100 pip take profit up there. It says 100.3. Down here it says 19.6. Okay, that's your stop loss. And it's the same for the buy stop and the sell stop order in pips, right? So you'd come back over here to the lot size calculator and you'd be like, okay, I'm going to put in 19 pips. Easy. Okay. Then you put in your account balance, whatever that is. Let's say it's $100,000. We'll just put in $100,000. Pip size, don't worry about that. That is something that is calculated behind the scenes and it helps keep things tuned up with how pips are calculated. You don't need to do anything with that. This is probably the most important part is your risk. How do you know what risk to put in? Do you put in 1% risk, 2%, 3%? What do you put in as your risk? This is just whatever the sequence multiplier calls for. So the prescription for today, if this is your first day doing this, would be 0.25. That's the dosage of lot size that you would need to take the trade. You know, if you're I'm going to be going to day 4 tonight because I've had a couple of losses for the last 3 days with the overnight strategy. So I'm moving up to day 4 tonight. So like a lot of you guys who have been trading this for a little while, you're probably like me and you're going to need to go up to day 4. So that's going to be 0.86%. So you'll move up to the next step. So we'll come back over here. Oh, back to the lot size calculator and you'd put in 0.86%. Also, very important that you put in the zero. I don't think it calculates correctly if you just do 0.86. I know it's stupid, right? But you have to put in 0.26, 826. Sorry. Why did I say two? 0.86 is what you put in, right? You could do a dollar amount if you know what that dollar amount is. Like I already know that 0.86 is $860, right? So you could do it by dollars. But it's probably easiest if you just do it by percentage because that's what the sequence multiplier demonstrates. Then you would click calculate. By the way, you don't need to do anything with the contract size. As long as it says $100,000 there, you're good. That's just how units are calculated as one contract, 1.0. And as long as that says 100,000, you're good. Okay, then you click calculate. And this is going to tell you some information here. It's going to give you an abbreviated lot size if your broker uses lot sizing. If your broker uses units, then it's going to abbreviate that in units. And then this is telling you that you're about to risk $860 on a 100K account. So you got to ask yourself a question. Is that an okay? Like, can I afford to lose $860 if this trade were to lose? And if that's not okay, then we need to redo some things or we need to review how we manage risk and stuff like that. Um, Oh, or you might need to subscribe to like a lower multiplier. Like you may want to consider using like the 1.25 multiplier if the 1.5 is too heavy for you, right? So it's just, and by the way, if you need some help with this, like if you're like, Steve, I see what you're doing, but I want to make sure I tune this risk up for me personally in my situation. You can do that. Like I've had people come to me who joined the program and they're like, "Hey, Steve, I already have a prop from challenge, but before I joined the program, I drew that prop from challenge down, 5% or 6% or something." And we can tune up and give you some coaching tips on what lot sizing that would be more appropriate for an account that's already down that you're trying to salvage. We can do that. Well, we just have to meet together and go through what that would look like, right? All right. But for most people, if you're in good standing with your prop firm or if you're trading with your own capital, this is going to work just fine. You could even, like, if you're very aggressive, there's things you can do with a personal account that are more aggressive. And I can teach you how to do those things, but they're more risky, but obviously more profitable when they work. So, anyway, there you go. So you go through this process. Once you know what you're going to do, then you go ahead and take the trade. So let me use let's just let me log into, I think I'm just going to use the Awanda, not the Awanda, the TradingView demo account. And let's go ahead and take a demo trade over here for some good practice so I can show you guys how to take this trade. So let's go back over here. So let's say that we were taking this trade today and we were about to take this buy order. Okay, so let's pretend that the market is back over here on the 14th and this is where we are. We're trying to set up a breakout trade in the buy direction and a breakout sell stop order in the sell direction, right? We don't know which way the market's going to go, but we want to take this trade. So all I'm going to do is I'm going to click the buy button on my screen. Okay. And it's going to pull up this window. And this is where you get to design up your trade. And let's go through each thing one at a time. It's really easy to get through here and forget a variable if we're just plowing through it. So I've learned over time. I've made enough mistakes with this kind of stuff where I've learned to just look at one thing, ask myself, did I do what I was supposed to do there? Yep, or no, I didn't. And then you go back and do it. So let's start from the very top. It says buy or sell. We know we want to do a buy first. I'm going to set up the buy first, is what I'm going to do. And so I'm going to click the buy. Then we have this right here, the little slider. You can slide between market, limit, and stop. For overnight trades specifically, we always use stop orders. Okay, we don't use markets, we don't use limits, we always use stops. Okay. Then the next step is to put in the price. So this is basically where you're planning on buying. That's what you're going to put in here. How do we know where we're planning on buying? Well, because we already put in this work, we did this work earlier. We know where we're going to buy because we put in this projection buy and this projection sell. And see, remember the blueprint concepts where we had to build a blueprint for ourselves? That's what these numbers are for. So this upper gray number is your buy price. So I'm going to put that upper gray number in right here. And I don't know if you guys can see it very well, but on the right side there, it says 1.17164. Okay. That's my buy price. Next step is the units. How many units should I put in? This is basically your position size. Well, we figured that out. We went to the lot size calculator and it says I need to use 452,631 units. Okay. So we're going to type that in 452, 600, and I already forgot. Let's see, 600 and, oh, 631. There we go. There we go. Okay, that's done. Next step, tick. Well, by the way, don't ever have to worry about ticks or this right here. As long as you put in the entry price and the units, you don't need to worry about this over here. Okay, next, take profit. You can either put in the price or you can put in the pips. The pips is the easiest thing to do, guys. It's super easy just to put in pips. So if you hover over your trade, you can see it says 100.3. So you could put in just 100.3 or honestly just round it up or down. I don't care if you round it up or down on the take profit. So let's just do 100. Okay. Boom. Ready to go. Okay. Stop loss. What are we doing here? We click that on. You can do it by price or you can do it by pips. Easier to do it by pips. What are we doing? You can hover over your trade and it'll tell you right there. It says 19.6. And again, we round that down. So just do 19. It's also the same number that you put in here on the lot size calculator as your pips and stop loss. It's just 19. Okay. So you just put in 19. Okay. And then the trade's ready to go and you can double check your work. The way you can double check is if the risk over here, if that number $860 matches what you put in right here or what came out right here, then you're good. You're solid. You did it correctly and you're good to go. So, all right. And so now I can go ahead and place this order. Let's go ahead and do that real quick. So I'm going to go ahead and hit buy. Boom. Oh, what is going on here? Estimated money impact is for main order only. Okay, that's fine. I hadn't seen that. It's just a demo account thing, I think, on trading view. Okay, there you go. That's perfect. This is perfectly set up trade. This is as if we're doing it on the 14th of August, by the way. So like this is a few days ago. So so what do we have here? So basically, if the market were to have broken up to the upside on the 14th, we would have triggered into a buy. And if this thing had kept going up, you could have made a total of $4,526 on this trade. The worst thing that could have happened is you could have lost $860 if that had triggered, right? So those are the risks involved. But you can see we have a much bigger take profit and a much smaller stop loss. So naturally, what's that going to do to your statistics? It means you're going to have really big wins and you're going to have smaller losses. And it also means you're going to have more frequent losses and less, you're not going to win as often, right? So let me go back to the journal here. Let me show you this and we're going to wrap up on this. And if you guys have questions, let me know and we can go ahead and answer those questions. Right now, I'm on day 4, as you guys know. I'm going to day 4 tonight because I've lost the last 3 days in a row. And so tonight I'm going to day 4. Watch how fast this turns around. If I have a stop loss of, let's say, 30 pips tonight, something like 29 or 30 pips, and this thing goes to the full 150 pip take profit, which is 5 times what we're risking, that trade would make $4,300 on a 100K account. Is that enough money to cover my losses from the last 3 days plus more? Absolutely. In fact, if you sum that up there, it's $2,810 in net profit. Fantastic. That's awesome. Okay, so $2,810 in net profit. That's after losses, by the way, too. So, which is great. So that's how quick you only need one win, basically. You need just one solid breakout day, honestly, just like once a week or twice a week, and you're cooking, right? In a month, you have like 22 days in a month to trade, and most of the money with the overnight trading strategy is made in 4 to 6 days. So I just want to make sure it's pretty clear, because I think it's really easy to this strategy is really easy to quit. I've had a lot of people quit this strategy, and it's really unfortunate because, and I've also had a lot of people that stick with it. Like there's plenty of you guys stick with it. You guys, a lot of you guys love this strategy. You swear by it. But it's not meant for everybody because it's a lot of work. You have to swallow a lot of cement to make this work because I mean, look at the win rate. We keep track of our numbers, right? 39.66, 39.69. There, no, 67. So yeah, it's like a 40% win rate. Yep. I mean, the equity curves looks good. This is the balance curve looks good. So this is balance and equity looks good here. So, it's positive over time, but you can see it's had struggles. It had a struggle back in June, had some struggles here, a little struggle there. But yeah, it's overall positive. And I think the reason why is because, yeah, look at the wins. The wins are over double the size of the average loss. That's why you stay profitable. Sergio says, do you always use a 15-minute time frame of the overnight trades? That's my preference. I like the 15-minute. It's hard to do this with like a hourly time frame or like a 4 hour. You could use a 5 minute, that would be fine, but the 15 minute seems to be about right as far as like looking at the chart correctly and moving things around. The 15 minute seems to work really, really well. Okay, I think that's what I needed to cover today. I'm kind of running out of time here. I've got because I'm doing another call here in about 3 or 4 minutes. We're going to meet together and we're going to talk more about the weekly trades. I'm going to do a demo on how to take the weekly trades using the stacking method. I really got to make sure we hammer that thing home. And then we also need to go over a few more things on the COT data and answer some questions that way. But any questions before I go? Because I'm going to take a 2 or 3 minute break here on the overnight strategy and then we're going to come back. Any questions? Robert said earlier, I'm having a lot of trouble with closing my winners as soon as they go green. Yeah. So yeah, it's an easy thing to do. I think a couple of things that will help with that is to, don't look at your trades that often, especially the weekly trades. Roger actually does something cool, and I know he's been helping you a lot. Roger doesn't even look at his trades during the week if he can help it. I think he may go in there a few times to close some trades if he needs to, but he just doesn't look at them. So, and I know a lot of other people do that too. So that will help. Don't don't let like trading apps become your Instagram and Facebook and TikTok, your adult TikTok. Don't let that happen. You know, I know it's easier said than done. I know I'm asking you guys to do a lot. But yeah, if it becomes like a social media thing that you're just like constantly checking, right? Like your kids do, right? We can't do that, right? If your stop losses are in and you've used managed risk correctly, there's no reason to go in and check trades all the time unless it's purposeful, right? Okay. Awesome. Okay, I'm going to take a 2 minute break, guys. Going to come back in a few minutes, and we will have a good discussion on the weekly trades. All right, guys. Thank you for coming, and we'll see you guys in the next webinar.